Hi, welcome to the Market Alert for Monday the 6th of February 2017. So the non-farm payroll figures come out higher than forecast, the actual 227, forecast at 170, previous 157. So if the figures are to be believed, there was a lot of jobs created in January. Whether this is true or not, who knows, but the market's reaction is obviously favourable, and we see the market move higher, market trades sideways, and then we start the session. We get a buy signal at 14.50, and we see the market moving higher there. We had the ISM manufacturing figure as well. That was a high impact news item, but as I said in one of last week's market alerts, the ones you want to be out for are central banks talking, and unemployment ones, and crude oil. But other than that, the other high impact news items really don't tend to affect the markets as much. Again, you can use your own discretion as far as whether you want to stay on or not, but you can see here the market was already set to move higher because of the non-farm payroll figures, which is far more important than manufacturing, because it's the unemployment figures that they've been using to decide on whether to increase interest rates or not. So it's going to be interesting to see what Yellen does at the next FOMC meeting, which won't be a live one, that will be in March. So the market struggles here, 2026, and then eventually breaks out to the 2050. And if you recall from Friday's market alerts, I drew in the 20,053 area as a target to watch, and that's precisely what happened. So let me just draw that in here for you. Let's see if we get a line. Let's just change the color to orange, and then let's just mark that up. I'll tell you what, let's just remove that one. It's not thick enough there, so let's make it so we can actually see it, and then draw it in. There you go. And then we want 2053, which is going to be just above the line there. So one more down, and there we go. So that was the 76%. I'm just going to save that at the moment because it's going to be important to have that on the chart. So you can see once the market got to this 76%, this is why I use this 76% there drawn in from the high down to the low. See how the market copes with trading back. Hardly any volume as well, which is important. And then you'll see how the market hugged this for the remainder of the session, doing its best to stay above the 50, kept dipping back and then going back, and now you can see it came back, and now we're back above it. So what's important here, if we go to the daily chart, is how the market's going to react to this. Bring that down a bit and draw in a 0 off the top of this one, because this is the all-time high for this market, and what we're trying to determine here is how much momentum the market's got to actually get back to this level. That will unfold during the day. Let's just make things a bit easier and remove some of these as well, so we've got a clearer picture of what's going on. So by using the 76%, if the market stays above this, it's likely to go back and have a look at the 20,139. And by having this drawn in on the 5-minute chart, you can see, without having to go to the daily, if the market is doing this in real time. So again, we're looking for the market to head back towards this level. We can get a double top, but first we've got to stay above the 76%. So if we get a 76% weakness in the market and a sell signal, then we know we've got the 76% and the 20,050 as a resistance area if the market can get back below this, if there is a short off this this afternoon. News wise today, well, nothing today. Not during the session. 7 a.m. German factory orders, which we're not interested in, so hardly any news there. And then on the implied volatility, 927 for Friday, which you'd expect because the market was up, so we're coming back below the 10% again. And my opinion hasn't altered in this. We're still going to see a correction in this market. At the moment, they've been able to use the non-farm payroll figures to bring the market back. Watch the 76% area and see how the market stays above that. If it manages to close above that by the end of today's session, then watch the all-time high, because that's the next target. Right, that's it for today. I will see you in tomorrow's reporting during the day. Other than that, thanks for watching. See you in the next one.